Alright. That was good timing with the song ending. Okay. So we saw a little bit of recovery on Biddy so far. Just more recently, in the last couple hours, we saw an imbalance of supply and demand on the local, right? So what happened in the last couple hours on Bitcoin is, well, this has been happening since yesterday, but we were defining that range that I keep talking about, right? Where you have all the short sellers in the same spot. You go to pop the top, but it wasn't that significant. Not only was it not that significant, but obviously saw an imbalance of supply and demand, so back in the range. So what are we doing right now? We're testing the other side, right? All the longs in the same spot, and now we're flushing out the long side. One of the big differences, though, that you can notice is we didn't dive as deep on the bottom side as we did on the top side. So it could mean another insignificant lower low before we get some sort of rally or some sort of mean reversion. You don't really want to see a mean reversion when the sweep wasn't too deep, and if you look at the high time frame on Bitcoin, this is where it needs to line up. So still that 89 level that I was talking about for a long time is back on the table, mostly because of how price reacted more locally to it. This was back in the 18th, so 10 days ago. This is the sweet spot now to hold, and unfortunately it's kind of at a spot where there's a resistance turn support, which isn't ideal, but it's not as well defined, and it's not that big of a deal. So one of two things happens. We obviously have a lot of equal highs that are now setting up shop at the top side. So we just took out all those local equal highs, but we have some more to look for now. So if you're on the more aggressive side of things, you could look for a long pretty much here where we're at, or you could wait for an insignificant lower low printing some sort of hourly bull div. And if you're on the more passive side, then you can wait for something like this to happen. And if this is held from 88.6 to 89.25, that shows pretty good fluidity. We might get a decent rally out of this. There's more areas with more stack liquidity, more equal highs that we can go and flush out. But as it stands right now, most of the stuff on the top side is still done, so we need to zoom out and use high time frame levels. In a very optimistic scenario, Bitcoin could rally all the way up to 109, 110. But we still have to take it one step at a time, right? This is a very optimistic scenario. So if I'm not online and the bulls do manage to put a rally together, then expect some turbulence at around 109.85. Outside of that, though, on the high time frame, there's not too much because most of it has been done, like I said. But we could still create some new data, just like we created new data here. Somewhere in this void up here, we could get some new structure that forms. And so you want to be able to identify whether or not that's going to be, a bearish structure or bullish structure, whether it's more likely to continue, whether it's not. Certainly a bad sign, though, that's come in for the last couple hours is the fact that we did get that imbalance of supply and demand here. So anytime, we sort of consolidate for a long time and we go for it, we want to ask ourselves, was that significant? And looking at the previous data to gauge whether or not, or what exactly significance is, right? Like what makes something insignificant, what makes something significant is usually due to what happened in the past. So obviously there was an imbalance of supply and demand, but the silver lining of that is when we zoom out, as you can see that we managed to make equal highs here. And of course there's more over here as well. So this isn't necessarily a red box. There isn't really a red box currently, unless you want to take a more aggressive short. The more aggressive short would be here, looking for the retest of where shorts got flushed out in the past. So all the shorts get squeezed, you guys know this, shorts get squeezed. There wasn't enough demand on the spot side of the book to follow the move. As a result, we fell lower. So where it's likely to be defended is approximately 92, more specifically like 91.96. Maybe I could have drew this a little bit better, but that's the area sort of to look for the more aggressive shorts. And there's not really a box here because there's not a lot of high time frame confluence. So I'll just make this, let's see, how do I Make this red. Okay. There is a possibility that we don't get a perfect wick off of it, but this is where you want to pay attention to bearish fluidity. So if we see something sloppy here, right, where we sort of dive into the liquidity and then it fails it, that's showing that the bears are losing control in the more local sense. You know, if bulls manage to push into bear territory, then, you know, we want to see, do the bears win it? And how decisively do they win it? So there's a good chance they're going to win it, but if they don't win it decisively, then there's a good chance in the future that they'll get ran over the next time we get close to that territory. So obviously paying attention to, you know, how some of these 4 hours close, someone in the chat mentioned along the top. Yeah, I mean, if the 4 hour closes below this previous low, that's a good start. It's not significant enough. Just how a candle closes isn't going to give you a surefire trade, but certainly having a 4 hour close below this previous low is not a bad thing. But yeah, man, there's some good silver lining here. The chart still looks pretty fucked. Like when you look at the high time frame, you know, obviously I'm not just talking about this huge sell-off that happened on Bitcoin. That's not good, but mainly where we sort of started to find the bottom on Bitcoin, or at least the bottom so far, is pretty deep into the void. You guys know, ideally I would have liked to just have a clean test of 89, but unfortunately we dipped a bit lower, and so we dove into the liquidity, which shows that, like I mentioned, I think last stream, that the bulls don't have that much strength. That can change, right, if the market continues to prove otherwise. But the closer you got to this low, the worse. So between these two lows, the best case scenario was just tagging the top of the line. The scenario gets a little bit worse when we dip lower into it. And I don't really want to go any lower than this if we're going to find a bottom here. Another low put in on Bitcoin going sub 80 is going to look pretty bear market territory. So if this is going to be the bottom, there's a chance at a recovery for Bitcoin. You know, at least to go above 100K again before going lower potentially. If we can't even get this local structure built, then there's a good chance that we're going to have a lot cheaper Bitcoin prices in the future. But as you guys know, it's still one step at a time. So the market can change. Certainly with, you know, the S&P doing good and silver, gold doing good. It's pretty good market conditions to help Bitcoin out. So I'll leave this up on the left. Let's talk about some other things and I'll come back to Bitcoin. I have silver up, but there's not much to say, right? Silver popped off. You guys didn't hear, CME halted futures trading for silver for some bullshit reason. Probably because there wasn't enough quotes left in the book. There wasn't enough. The market makers were kind of fucked in terms of providing liquidity on the sell side, is my speculation on it. But the news is that, you know, futures got halted, whatever it is. But silver is rallying. The fact that it's holding where it's at, this is a pretty big level. If we zoom out even more, you can see, not on this chart in particular, but if I open up another silver chart here, I'll show you. Let's look at this one. So you can see that back in 2011, silver made that high, right? And now it's maintaining pretty much a new all-time high. This is where you would see an imbalance of supply and demand. The fact that the imbalance of supply and demand hasn't come in, and we're likely going to close this week above the previous all-time high is a really, really strong sign. You guys know I've been saying that silver's strong, and I still believe it until proven otherwise. So, I mean, this thing's got room to run, guys. I wouldn't be surprised if we see a pretty monstrous rally out of silver. This was the last spot to hedge on silver, and then once we return to it, crack the highs. So unless we see a huge sell-off, I don't really see any opportunities to hedge silver. And, you know, we'd have to see some structure form that's quite bearish, maybe some 4-hour bear div or daily bear div, but none of that has been printed yet on silver, so the plan is still the same, up and to the right. Not really many hedge opportunities. Like I said, this was the last one, and I don't see any others for the time being. So until those present themselves in the chart, it's net long on silver, pretty much no hedge. Gold has definitely done quite a good job. I think that this spot where we're at on gold, we could see a potential dump, but at this point, it's not a big deal if it does dump, because almost everything is done. A little bit of a dump is fine. Obviously, a major one wouldn't be good, but structurally speaking, it's holding. You know, gold could pop at it at any moment as well. So it's made a nice recovery. It looked pretty bad around here, but you guys know I started to change my opinion a bit more once we started forming this structure, and then certainly changed my opinion even more when we had good fluidity here on gold. So in the same boat as silver, likely going to go higher. And why is this important for, say, like Bitcoin? Obviously, having that bullish market sentiment coming in from other alternative currencies, plus just bigger market caps, is going to be a net benefit for... is the music loud? Hold on, let me turn it down a bit. A net benefit for crypto. A little loud on my end. It might not be loud for you guys. Okay. But yeah, man. Gold looks good. Silver looks good. S&P, more importantly, the VIX looks really good right now. We took out all those equal lows I talked about last stream. And we didn't go for a nosedive. So up and to the right on the S&P. It does look a bit spooky still. Don't get me wrong. Same thing with Bitcoin. It still looks a bit spooky, but certainly when looking at the VIX, the structure is broke for the bulls on the VIX, which means that we'll likely, at this point, there's a good chance that we'll likely get lows lower than 14 on the VIX, potentially lower than that, which basically means that it should be smooth sailing across the board. Things can change, right, in the market, but as it stands right now, at least for the legacy markets and traditional markets, it looks like pretty high chance of smooth sailing. I mean, it's not to say that we won't get corrections, right? The market doesn't just go straight up. We could still get pullbacks, certainly, but as far as how significant will those pullbacks be, probably nothing too crazy. I mean, even what we saw here was pretty dramatic, but it makes sense, I guess, and more so in retrospect, to take out all the equal lows. It's just sometimes that the S&P doesn't take out the equal lows, like examples are here and here before going higher. But the fact that it finally did do it, and we didn't see, you know, some catastrophic sell-off, which was on the table as a possibility, obviously is a really big sign. So you guys know I don't like to use technicals too much on the S&P 500. I like to lean on the VIX. And as far as the VIX is concerned, from a technical perspective, it looks pretty fucking bearish. So really good sign for most assets across the board. Obviously, crypto has on the intraday will follow the S&P for the most part, but it's certainly shown a lot more weakness than the rest of the markets in more recent time. Yeah, the market's closed for the legacy market. I'm just giving you an update because I've been streaming since Tuesday. But yeah, these markets are closed. Just showing you an update on my thoughts on them. Gold and silver are still open, right? But they're not going to be moving much because partially closed. So oil, still a little bit of a rally coming out of oil. I should really clean up this chart. It's a fucking mess. Yeah, I mean, the only opportunity I see on oil is to wait for it to go higher to short it again. If you're brave, you can long it, but make sure that you're not, sharing the same invalidation. So plan for oil still the same up, but long term still looks bad, still looks bearish. So any significant rally that we see out of oil will likely lead to just adding on to short sells or opening up a short sell if you don't have one. Unless we start making highs higher than these highs, but until then, it's still bearish. And any rallies inside the range, like I said, just lead to adding on. The dollar is still doing great. We could have a bit deeper of a move on the dollar. These currencies don't like to move too fast. Pretty slow moving stuff. So a pullback on the dollar wouldn't be the end of the world. The high time frame plan is still the same though, so that hasn't changed. It likely won't change. I'd have to see some really bearish structure start to form here on the dollar for me to change my opinion on this. And even then, it'd have to be really convincing that that the local structure we build between this line and this line is looking extremely bearish in order for me to change my opinion on. So dollar still looks good. The 10-year is taking its sweet time, but it'll likely come down as well. So 10-year bond market, 10-year yield for U.S. government bonds likely going to come down. This just makes sense, right? Because it's likely that we're going to get a rate cut in December, and the relationship between the rates and the yield, largely affected by supply and demand, if not completely affected by supply and demand. So the relationship between them is pretty close. Might lag a bit, but because rates are coming down, yield will likely come down as well. Tesla play is working out nicely. You know, if you didn't get fulfilled or you missed it, obviously there's going to be another opportunity. It did get pretty messy down here, so for the options traders in the chat, definitely going to be more difficult to grab these kind of moves than spot traders. But Tesla looks good. Completed the bearish divergence, went to the void, held it, and so, you know, stack liquidity on top side or the structure that we're looking at on top side. I mean, we maybe get a little bit of rejection here or something, but ultimately it should go for new all-time highs on Tesla as long as the S&P looks good. And right now with how the VIX is trading and how the VIX looks, it looks like Tesla will be making a new all-time high. I don't know about when exactly, but it seems pretty likely at this point. The rest of the Mag 7 is pretty much the same except for NVIDIA. NVIDIA needs to hold it here and now, otherwise structure starts to break. I'm not saying NVIDIA heads into a bear market, but we could see something reminiscent of like this, right, that we saw earlier in the year. That's certainly on the table if it doesn't hold where it's at right now. And then we'll address that situation if it does occur. If it doesn't occur, then holding it just means another all-time high on NVIDIA as well. So the rest of the Mag 7 looks pretty good except for NVIDIA. But NVIDIA can look better depending on what happens to pretty much at the open on Monday. Should have a good idea by Monday on whether NVIDIA is going to go for a deeper dive or just continue higher. What's up, Magic Nicola? Wyvern, welcome. Xeon, how's the turkey? The turkey's pretty good. It's not my favorite part of Thanksgiving, even though it's... I mean, turkey's not bad, but, you know, it's not like the preferred meat. Ethereum is still working out for the most part. If you guys were here last stream, I told you Ethereum actually looks a little bit stronger than Bitcoin. And we're certainly seeing that in the price action today. This was a messy fight for Ethereum, but it's technically good enough because there's a lot of breathing room. You don't really want to make another low on Ethereum because then the higher time frame structure starts to break a bit more. So it still looks pretty good. I mean, ideally we would have just liked the perfect test off of 29 that we've been waiting for, but we did go a bit deeper, right? So we could see a retest of 29.20 again. So like if Bitcoin pulls back, say to 88 to 89, we could get a retest here on Ethereum at 29. If that's the case and it holds it, then it looks really strong. Same thing with Bitcoin. If this is the case and it holds it, it looks really strong. And then if there is a significant rally, it should line up as well. So on Bitcoin, I showed you guys that's approximately at the previous all-time highs from earlier in the year at like 109, 110, which should line up hopefully with Ethereum at around 4,000. So if the bulls can mount a rally, then from 90 to 110 on Biddy, and then that should bring Ethereum from 3K up to 4K. These are nice round numbers, but there's logic behind them. Like they're not precisely 110. This is 109.85, and this is 3923 on Ethereum all the way up to 412, but just call it 4K. But yeah, just in case that I'm not streaming, those are the two areas where I'd expect significant turbulence if this rally does have legs to it. And then if there isn't turbulence there, then things are looking a lot better. The market conditions are pretty good though. Like when you look at the VIX breaking its structure, obviously the S&P gearing up for a new all-time high, and then precious metals ripping it to new all-time highs. It's really good conditions for Bitcoin to do well, and it's still kind of struggling, which is unfortunate, but if these conditions remain that strong on the bigger market caps, then, I mean, Bitcoin gets a lot of fucking help here. It's already gotten a lot of help, but there's a good chance it'll likely continue to get a lot of help as we see risk on back into the alphas start to become more prominent because of volatility subsiding. So we'll likely see next week nothing too crazy in volatility. I mean, maybe a little bit, but I don't think as crazy as the last couple of weeks on the legacy markets, which we should see risk on start to drip back into the market. And then if that trend continues and we continually see volatility lower in the legacy markets, then Bitcoin can do a lot of catching up. Whether or not that's going to have legs to it past 110K is something that we'll have to cross when we get closer to it, so I can actually see the structure and what it looks like and whether or not we've held stuff with good fluidity on the bull side of the market. If not, then, you know, I can't have that strong of an opinion, but it's one step at a time anyways. This is more of an optimistic vision if bulls can actually show good fluidity at the lows here. Maybe we don't have to test it. Maybe it's all about this range that we've developed since yesterday. But if that's not the case, then Bitcoin must pretty much hold this green box, as simple as that sounds. But reason being is because all the market participants that got flushed out here and the previous structure held. It got pretty sloppy. There's a lot of equal lows, so don't want to discount that, right? The fact that on the way back up, we have two scenarios of fragile structure is a bit of a concern, but it's only a concern if we get close to it again. Maybe sometime in the future, if Bitcoin does eventually go lower than, you know, 80,000, it's going to be a pretty rough ride down because of leaving behind this fragile market structure. So if Bitcoin does flip bearish again, it does look kind of bearish right now, but if it does get more significantly bearish on the way back down, it should expedite the move because of all the leverage being placed in the same spot on the buy side, the long side. But because this structure was technically held, a little bit of a sloppy hold, but it was technically held, then we would assume that the next area would be here. You can make an argument for here, but this has already been smashed. So the next area in the structure where previous market participants lost and there was liquidity on the market, or just, you know, areas of significance that we were able to see in the past. Yeah, this green box is going to be pretty important. We've seen scenarios in like super risk-on environments where we don't need to test the structure and we can just go higher. Saw that on Tesla recently, but you know, in the event that that does happen, that's where to look. So if you weren't here at the beginning, there's an aggressive long in this range here where we're at currently, maybe a new low before pulling the trigger on that, or if you're really aggressive, then just going for it. But those are the more aggressive plays. And then, you know, if the aggressive plays just get absolutely destroyed, then the more passive approach is to wait for the green box. But if it doesn't happen on this move down that we just saw, pretty drastic move down that we just saw, then there's a chance it'll happen after we see what happens here. Have you looked at Mon? No, I don't. I've heard some buzz around that ticker. It's like Monad or something. I don't even know how to pronounce it, but I'm not too sure about that kind of stuff. So if I'm not sure about it, I usually don't risk any money at it or look at it for the most part. Mental short squeeze. As far as liquidity goes, I didn't show you guys. Cheap viewers, stream boot. Dude, I don't view bot. You're gonna get banned. Alright. Someone just came in advertising view botting. There's so many fucking view bots on Twitch, it's actually crazy. But let's look at, so obviously this happened, right? Topside liquidity was built. You guys can see it here. This is why you don't necessarily need the external tools, because you can just see it on the chart, right? When you look at this chart, let's pretend you didn't see what happened there, and then I'll update it. Where do you think all the short market participants are? It's pretty straightforward because, you know, how many times did we touch this quote-unquote resistance? Meaning that, I mean, even this drive here can be included, but if people had shorted Bitcoin, say here, or here, anywhere in the range, they got taken out. So they clustered up at the top side. You guys can see that in the chart without needing the external tool, but obviously the tool helps if you want to just double check it. So same chart, just a bunch of people stacking liquidity topside get taken out. That's only in the 48 hour though, so let's have a look at the 3 day as well. Am I not logged in on CoinGlass? Uh-oh. Last time CoinGlass went down, alright, it doesn't want to show it to you, but you can, like I said, you can see it in the chart. It's right here. This is in the next spots, because it's the equal highs. So if they shorted Bitcoin at any point in the last 8 days, 9 days, then they would have been invalidated on this move that we saw today. If they didn't, then it's likely that their invalidations are at the highs. So if we can manage to get there, we'll see a flood today. I don't know. We'd have to see a lot of strength come out to get that today. Maybe it's a lot to ask for to see it today. It's probably not going to happen. But if it does, then we'll see a big flood zone come in. A lot of orders coming in at the same time. But this recovery is not bad so far. It's, you know, I'm still stringent on these rallies. I'm still conditional, right? It's not that I want to be. I want Bitcoin to go higher, but you guys know how it is. The silver lining right now is there's a couple things, right? The main thing is that because the VIX structure got broken, it's just very likely that the stock market and other legacy markets will do well in the next couple of weeks. Probably. The way I'm looking at the VIX chart and the way I've been looking at it and been thinking about it, there's a good chance that the S&P 500 and gold, silver will be good for the rest of the financial quarter. So we'll probably be good till next year, maybe longer, but I don't really like to speculate that far out, but it's pretty straightforward on the chart where the VIX, you know, just cracked a lot of structure. The issue with this though is that we did leave behind some fragile structure on the VIX, so that might need to be revisited sometime in the future, but I don't think it's going to be any time in the near future. So the silver lining for Bitcoin is the fact that the volatility index is just completely smashed on the bottom side structure, which means that the S&P will likely show a lot of strength. And of course, liquidity provision models that are built for Bitcoin are dependent to some degree on the price action in the stock market. So to make that in plain English, because the stock market looks good to go up due to the fact that the volatility index or volatility looks like it's going to be low, means that market makers on Bitcoin are going to be more likely to provide liquidity on the bid side of the book. And you can see that right now. I mean, liquidity is deep as fuck right now on both sides of the market, but having it on the bid side is pretty important. There are some icebergs that are setting up shop here on Bitcoin. They're not really that deep yet. They start to begin, the ones with conviction start to begin at 95 up to like 98. But you can see they're kind of shaky, not as much conviction as say like, you know, these deep water icebergs, much bigger and had a lot more conviction. That could change as we get closer to it. But as it stands right now, that's you know, they could sort of look a little bit weak on the top side. We'll have to keep an eye on that, because if they start to show more conviction, they start to look bigger, then that is an area we could run into turbulence. But it doesn't really line up with the price action on the chart. The only thing that lines up with it is the short squeeze. So if you want to sell a lot of Bitcoin, you could push to fill, so to speak. You could push the price up above 93, above 94, and you will get a lot of buyers in the derivative market, which should give a decent amount of buyers in the spot market. We'll have to see that relationship if and when it happens to see if there's an imbalance there, but that would provide a lot of buy-side liquidity on the market if you wanted to exit positions on Bitcoin. It's a big area to watch because, you know, we just saw this sort of imbalance of supply and demand happen here, right? On this sort of local structure that was only formed for the last, I don't know, 36 hours or so. We saw an imbalance of supply and demand. This structure is bigger, right? It's been around for the past couple of weeks. So if we see something similar, like, you know, we crack it, but then we fail it, and it's not very significant, that has much bigger ramifications on where Bitcoin's going on the longer term, because it's more data, it's a bigger structure. So if and when we do actually go for above 93 or above 94, it needs to hold it. It's very important. So there's no point of going for it unless we're actually going to hold it. And you know, you want to make sure that you're paying attention to what the spot books look like and the spot order flow that's coming in at these times, because leverage has already been flushed in those kind of scenarios where it's not really up to the leverage market anymore. It's sort of in the hands of the spot market to maintain the rally that was caused because of a short squeeze. Show me where to short ENA. I don't trade ENA, but let's see. I probably have a chart on it. Alright, that's the chart on it. Volume's pretty dog water. It's good fluidity though. I guess I've looked at this a couple times in the past. Like an aggressive short, there's not really any shorts to look for. So, like, this chart looks bad, right? This is a good example for active investors and traders in the chat. This chart looks bad. It looks like it's going to go down, right? But where are we sitting relatively? Are these not the lows from a relative perspective? So I can definitely see a world where it's trading like down here. But the question is, what happens before that? Do we rally all the way up to, say, here before that happens? And if we do, then shorting it right here means that you're going to be underwater or potentially squeezed out of your short before you actually see the move happen. So this is applicable for pretty much any financial instrument, but the way that you want to look at it as a trader or an active investor is you might be right about where it's going, but if the chart's not in a good spot, then you could easily get taken out before being right, and that matters because they're trying to make money on the charts, trying to make money on the markets, and that's as important. So it's the same thing. Like if we were up here and you were very bullish on it, and you think it's going to go make a new highs or something, or be trading up here at some point, doesn't mean that you just long it here, unless you do like DCA on spot or something like that. You have to wait for it to come back down to the relative lows. So it's kind of that, as simple as it is, this sounds, buy low, sell high type thing. You don't really want to sell low, if that makes sense. Now, what could happen is you could be right and it could go lower. But I still wouldn't, identify that as a good trade. I mean, it worked out, right? So making money, it has to be a good trade. In my opinion, in these kind of scenarios, it's not necessarily a good trade. But the reason why this chart doesn't look good is, one of the big examples is there wasn't that much volume on the dump. So if anything, right now, on this chart, the only thing I can see is to long it. I wouldn't long it, but that's the only play I see is actually to long it at this point. I can zoom in and look at the structure a little bit better if you want, but yeah. I'm just using this chart as an example to teach you guys how to read other charts. Because I don't know how many people actually really give a fuck about this coin, other than the person that asked for it. But it's a pretty key concept to keep in mind. Like, execution's very important. Strategy, you could be really good at knowing where it's going to go next, but if you're not waiting for a good entry, then you can be right and still lose money, which is double the pain, right? It's one thing to be wrong and lose money. Being right and losing money, that hurts. So another way you can think about it is like, there's always another chart you can trade. There's always another financial instrument you can trade. You guys didn't even know we were going to look at ENA today, which is why you don't want to marry any individual asset. I mean, you guys can argue I pretty much proposed a Bitcoin, but you know what I mean? Like, you don't want to force anything on it on any individual asset when there's thousands of them that you can trade. What about Gyat coin? Is that even does that even have leverage yet, or is it just on the meme coin markets? I don't mind looking through some of these alts if you guys want to, but just remember that the big thing to look at is how Ethereum's doing. And then, well, if you're starting top down, you want to start with the bond market technically, but you can kind of see it in the S&P. So you can start with the S&P, more importantly, the VIX. So looking at the VIX, then looking at gold, silver, then looking at Bitcoin, then looking at Ethereum, and then finally looking at your altcoin. As long as the market cap's rather big and it's trading with a decent amount of leverage. So if it's just some random meme coin, it's likely not going to be, it's likely not going to follow the market sentiment of the greater markets that nicely, compared to the bigger market caps, right, that have a lot of leverage in them. So if it's some random meme coin, you don't really need to do everything I just said. But if it's even something like ENA, which is on Binance, so I'm assuming the market cap is probably in the billions, probably has a decent sized leverage market, then you still want to yield to the top down way of going about it. Can you look at Zcash? Yeah, Zcash is a pretty interesting one. lots of buzz around Zcash, right? Because it's one of those few alts that actually decoupled from the rest of the pack and pumped a good amount. Man, Zcash looked real good. It's kind of getting fucked right now. The volume still leads me to believe that it's still rather strong. It just might have to go a bit lower first. The structure now might seem like I'm flip-flopping sometimes with some of these charts, but it's because, you know, the charts change. You know, every week or so that new data comes in and a new structure gets printed. I have to reevaluate it. It's not that I want to flip bearish on something or say that it's going to go down. It's just the nature of the market. So it's not up to me. Anyways, when I look at a chart like this, it's pretty well defined where the highs and the lows are, right? Or where the invalidations would be setting up shop. So if we were sitting right here, like anywhere in this box, I would say that the structure looks rather neutral, and so it's better to yield to the trend and the volume analysis because that's all you can do. So if you're sitting somewhere in this box, I would say it looks bullish. But now, if we do form equal lows with these lower highs, it's pretty straightforward where the invalidations are resting close to where the price is trading at. So short sellers could have invalidations here, here, or the big one up here. Long market participants, where we're at currently, are likely to have invalidations here. I mean, they could have them down here and here too, but that's not as much data that's assigned to these ones. The price wasn't trading here for that long. So this could look bad, but it's also an opportunity depending on what happens. Let's say that the rest of the leverage gets flushed out on Zcash and we go deep sea diving. If it's insignificant, if the dump is insignificant, and we see a spike in volume showing that there's more trading activity, irregardless of it dumping, and has been dumping for, you know, like the past week. So if we see an insignificant low here, based off the relative action in the past, it's able to regain where everybody got flushed out of liquidity, then we can go for all this topside liquidity. But this is where you run the risk of having like the doom candles come in because everybody's selling at the same time. And the question is, will buyers actually step in? So it's scary when you get here, but it's also potentially an opportunity because the volume is still pretty good. Yeah, we'll have to take it one step at a time, but I need to see exactly how it prints and what kind of volume comes in, what the structure looks like, maybe a little bit on the orders, and then I can have a better idea of how this is going to behave when it gets down here, if it gets down here. But as far as like where the opportunities are on this thing right now, if you're completely hands off, you have to see what happens if longs get flushed. If they don't, then maybe we could build some more structure here and form like a 4-hour bull div with an equal low, and then you could see something like this start to rebuild structure from here and here. That's an optimistic scenario that could happen because in the last couple of years, we've seen equal highs and equal lows be print pretty fairly often. Like even on this chart, look at all the equal highs, and then on the way up, look at all the equal lows. So if that is the scenario, and we do see an equal low around 420, then paired with like a daily bull div, which is possible here. Let me just zoom in and double check it real quick because I've marked up the chart a lot. Okay, so 4-hour, not so much. In fact, it looks like a hidden. Yeah, we'd have to let it develop a little bit more. But if we do see like an equal low or something, you know, something like this. Oh, that was a poorly drawn line. Let me just use an actual horizontal ray. Something like this, maybe. Then you want to hold this next because this is where people got flushed out before. You want to at least revert back to the previous mean. And then if you do see decent fluidity from the bears, it should dump there. So something like this would be the route back up on Zcash. But that's the more aggressive play because if you are to long it here, then you're going to be sharing the same invalidations as the people over here from the beginning of the month. Or at least close to them. So yeah, if you're on a big account and you're worried about slippage, this is not that good of a trade. But if you're on a smaller account, you can be a little bit more nimble and potentially take advantage of it. What are your thoughts on the dollar? Still bullish on the dollar. The plan hasn't changed for the dollar. Here's the chart. you know, we could get a dump from the dollar, but I mean, look at all these equal highs. And insignificant lower lows with flushing out liquidity. So maybe we get a small dump on the dollar. I don't think we're going lower than this low. It is possible, but I don't think it's very likely. And then if that's the case, then we should have a nice pop on the dollar. The structure's all held fine and dandy. In fact, the action that we've seen on the dollar this week has been a little bit concerning, but nothing too major. It's actually kind of important that we hold it soon without damaging the structure, but yeah, it's been a little bit trickier. I thought we'd already have the pump by now on the dollar, but currencies move slow, like I said earlier in the stream, so it's in a tricky spot, but where it's at right now, right here and right now, it definitely looks bullish to me still. Yeah, the other way you can look at it, like Trexie's saying, is actually one of the better ways you can look at it is euro against the dollar. But if you go down that rabbit hole, then you want to also look at pound against the dollar, dollar against yen. Obviously, euro against the dollar is going to be the biggest by far. In fact, let's look at that chart together. Euro versus the dollar. Yeah, to me, this chart looks the same. Whoa, Curly, are you okay, man? Where's my? Did I have another chart on this? Maybe not. I must have scrapped it. But yeah, I mean, this would be like looking for equal lows on the. It's euro against dollar. The last chart was just the dollar, so it'd be like instead of looking for equal highs, you'd be looking for equal lows. But I'd argue that this is pretty close to it, and the fluidity here wasn't that good. So maybe we do see a pop on the euro against the dollar, but if we reject here, then we should be going for the low that created the insignificant higher high. So we have a high, the low that created it, the insignificant higher high. And so yeah, I mean, even the rally, like I said, the rally we saw this week is actually pretty surprising coming out of the euro. I wasn't really expecting that. It does, you know, slightly affect my analysis on the dollar, but the fact that these things happened, right, is still a little bit more important than what's happening right here currently. So, in a very bullish scenario for the euro, testing these previous areas, which is mainly looking here and here. So a red box up here on the euro. If the euro pumps through that, though, the dollar is definitely going to make a new low. But yeah, I mean, the action today is pretty surprising. Does Bitcoin do it on the low time frame? God, it is struggling along, but it's doing it. This kind of price action is just like getting carried by the market sentiment of the S&P pretty hard. Liquidity still is really deep for a Friday. Yeah, the only play is the long it right now, but it's not the strongest long. You don't really want to be hovering here for too long, and just from a momentum standpoint, right? Like how fast do we go down versus how long is it taking to go back up? That's not necessarily indicative of where it's going to go next, but it certainly it's not bonus points for the bulls. If anything, it looks a little bit more bearish because of that. ETH against Bitcoin struggled, but it's good enough. This fell out, but this one is held. So if ETH against Bitcoin can continue to hold this, we should see a pretty strong rally. I mean, even if the best way to do this, I've said it in the past, the best way to look at it is to put Bitcoin against the dollar on one chart and then ETH against the dollar on the other chart. Look at them side by side. Currently, like I'll do that for you right now. So the two areas that I was talking about on both ETH and Bitcoin for God knows how long was this low here at around approximately 2,900 and this low here at 89,000 on Bitcoin. So let me clean this chart up now. So if we're looking at both these lows as being pretty significant areas, Both of them have reclaimed the lows. Ooh, Bitcoin's pumping a bit, it looks like. Nice. Both of them have reclaimed the lows, but look how deep they went, right? So like how deep did Bitcoin dive into this liquidity? So I'll mark out this now as well. And this is... So mark it all out like that so it looks, you can see the similarities. You can see that Bitcoin relative to the distance between these two lows dipped a lot deeper versus Ethereum. The distance between these two lows, didn't dip as deep. That might seem too simple, but in my opinion, it definitely makes it look like Ethereum is a lot stronger here because the fluidity was held better. Meaning, when these battles commenced and the bears pushed into bullish territory, how did the bulls react? In both case scenarios, it wasn't a clean, decisive victory, but it was a little bit cleaner and a little bit more decisive from the Ethereum bulls than on Bitcoin. And I mentioned this last stream that Ethereum actually does, I hinted at that Ethereum does look a little bit stronger as a result of that. So there's a good chance that, if we do see some sort of bounce back or rally to squeeze out some shorts, I think Ethereum will obviously do a little bit better. And the fact that where ETH on Bitcoin is sitting currently is pretty important. Because it did get messy, right? It did dive deep into it, but it technically still held it. It's a good news for the altcoins. Obviously, there's still a lot of fear on the market on the altcoins and just crypto in general. Particularly when you look at the S&P and you look at gold and silver, they're all rallying like motherfuckers, and then you got Bitcoin that's just holding on for dear life. There's another silver lining to that, which is everybody who can short Bitcoin is likely shorting it, at least has a hedge open at this point. So that's good and bad. It's good because it can help rallies form. The bad part of that is, well, there's two parts that are bad. If somebody's shorting Bitcoin, they're likely also selling spot because people in crypto are just very aggressive. They take very strong bias, right? You guys can probably notice with how the chat flows in here and just in general, any social area you go for crypto, people are usually one side or the other very, very strongly. They're either very bullish or they're very bearish, and there's not much in between. So to get back to what I was saying, the two bad things about everybody opening up shorts is, they're likely selling spot as well because they're just very, very bearish. And then the other thing is, if we do pop the top and we go for the highs, it's harder to maintain the rallies because a lot of the rallies are fueled by the fact that shorts are getting squeezed. So in order to get a good rally, you can't just squeeze out shorts. You need actual demand, right? I say this all the time. Which, my spot holdings, that's what I want to see. But as far as trading, it's actually quite nice because it makes it really obvious where there's opportunity. So where would there be opportunity? In moments like this where a lot of people are using leverage on one side of the market, the opportunity would be waiting for them to lose and then seeing how the price reacts. So this is a pretty clear example that came in to us, the last couple hours was everybody stacked up topside, everybody got squeezed, it got knocked back down. So now, how would you take advantage of this? You wait for where everybody got squeezed or where there's liquidity present, and then see how price starts to behave around here. You don't need to just have a resting limit order because, most people can't handle losing a trade, and this is not a guaranteed trade. But if you see the price behaving on the low time frame around 92K in a way that looks bearish to you, it's because the high time frame move is likely to send it lower. Long ETH, short Bitcoin? Yeah, it's hard for me to say that with certainty just because, the last, 4 years has been the exact opposite, right? Last 4 years has been long Bitcoin, short ETH as a hedge. But I certainly think we're at least getting closer to a world where the play will actually be to long Ethereum, short Bitcoin. And the only reason let's say that they both rally together. I mean, it means that your short on Bitcoin will likely get invalidated, but your long on ETH will likely run for a while. It's not because I dislike Bitcoin and I like Ethereum. It's just a pretty free hedge depending on where we're at in market conditions. And when I look at the high time frame of ETH against Bitcoin, it screams to me that you know, maybe it doesn't happen tomorrow, but there's a pretty good likelihood that ETH will outperform Bitcoin. I mean, just from the dollar charts as well as ETH against Bitcoin, both of them point towards ETH actually outperforming Bitcoin a bit. But, you know, some people in the chat probably rolled their eyes and got frustrated with that statement because the last, you know, like I said, 4 years, ETH has been getting slaughtered relative to Bitcoin. I mean, ETH's sitting at the same price as it was 4 years ago, whereas Bitcoin has made, you know, multiple all-time highs. You know, I could be wrong about this, but let's see how it plays out. And again, the main analysis I'm using for this is very simple. Both Bitcoin and ETH had to test the structure. It got quite messy, but it got less messy on Ethereum, which is not typically the case. Normally it's the other way around, right? When we do get a dump in crypto, it hits the whole market, right? Normally it hits ETH way harder than Bitcoin. And you can argue that it did, but also on the way back up is important because when you look at the ETH chart, we had a lot of devastation and destruction, and we're just now starting to form something. So if we're just now starting to form something, there shouldn't be that much confidence in buyers relative to Bitcoin. Like if the markets dump a lot, usually Bitcoin's going to be stronger than Ethereum, right? And then when the markets start to form some sort of comeback, Ethereum won't gain strength until it's very fucking obvious that it's back to risk on environment. I don't think it's very fucking obvious that we're back to risk on environment when you look at a chart like this. We're barely coming up from the lows. So it's not really, the chart isn't really, you know, showing that, oh, it's time to go back risk on in crypto, which means it's time to buy altcoins, time to buy Ethereum or whatever. But even in spite of that, Ethereum is doing pretty good, which I think is interesting. Because usually you don't see ETH outperform Bitcoin until we're later into the comeback. But when we're early into the comeback, it's usually not the case. So it's another instance of ETH showing a little bit more strength than Bitcoin. I'm not saying it's guaranteed to continue, but it is interesting because that's not normally how it plays out. At least for the last 4 years and even times prior than that in certain circumstances. So just it's a possibility that we do see some strength coming out of Ethereum relative to Bitcoin. We have seen a couple instances of that look pretty abnormal relative to the past 4 years. If that continues, then I don't think it's just going to happen overnight. I don't think we're just going to have one giant green candle that takes Ethereum to like 10K or something like that. So there'll be time to continue to observe the relationship between the two, and still be more patient and passive if you're not fully convinced that that's the case. But I'm just saying from my experience and staring at these charts so fucking often, that there is some slight differences in how ETH is behaving right now than it has in the past relative to Bitcoin. What would be the best case scenario for bulls? Going to the moon, obviously. No, but a good scenario for the bulls is if it does come down to it, testing 89 again, and because the action that came in on the 19th, so a couple weeks ago, testing as far down as 88.6 is also okay. So if it does come down to a test lower, this box is red, but it should be green, then this must be held, and ideally it's held with good fluidity, meaning we don't see this kind of shit that comes in. That's no bueno. But something like this shows that strength is starting to be regained, paired with the fact that we still have a lot of equal highs and last second shorters coming in. I'm not saying that this is the rally that takes us to the all-time high. I mean, it might be, but I'm not saying that's the case. I'm just saying that it's a possibility that we start to squeeze out more short sellers that sort of dogpiled in at the end. Because when you look at like ebbs and flows, right, it usually there's usually some sort of rhythm to it. It's not just like straight down. In crypto, there's definitely instances where we go straight down, right? But you know, if I show you like a weekly chart, it's hard for me to assume that like that the Bitcoin chart just looks like this, just like a straight plummet down. Usually there's going to be, because even on the way up, right, there were still pullbacks on the way up. So the same thing would be to be assumed on the way down. And it's interesting in crypto, well, when you look at like a stock market, right, if somebody says the stock market's really volatile, they usually are implying that the stock market goes down. It's going down. Like if they say, oh, the stock market's volatile today, they're usually just saying, oh, the stock market's going down. In crypto, it's almost the opposite. So if there's volatility in crypto, it usually means the markets are actually going up. You can just see that based off the chart. Like when we're in periods of going up on Bitcoin, it's usually quite fast. And when we're going on periods of going down on Bitcoin, it's pretty extended, right? Same thing here, right? Pretty fast on the way up in the COVID rally, and then sort of just taking its sweet time on the way back down. So if anything, that just shows that, you know, we're more likely to have these sort of short squeezes or recovery rallies. The question is, do those recovery rallies lead to something more? And that's something that I evaluate one step at a time. Could they? They could. Like, could we rally from here to the moon? It's possible. Anything's possible on the chart. But I'm still going to be with how the structure is looking without got damage. My plan is still the same, which is I can definitely see us rallying, but I'm going to be very conditional and stringent on the rallies. So it's going to be harder in these kind of circumstances to convince me that these rallies that we get, these pumps that we get, are going to have legs to them. They certainly could, but I'm just going to be a bit more conditional with, you know, whether or not that's going to be the case. Holy wall of text. I'm going to get a cup of coffee and then I'll read that. Be right back. I gotta catch up on the chat here for a second, boys. Do you think the US will start printing a bunch of money soon? Yeah. I mean, once rates hit zero, there's no option but to print money. There's only two ways to fix an economy. And it's not fixing it, it's like a short-term fix. Like, how do you short-term fix something? You cut the rates to promote economic circulation, which technically should lead to job growth and more consumerism. But then once the rates are at zero, what do you do after that? So you're trying to stimulate the economy. It's likely inflation. And as we all know, inflation is fucking horseshit. It's terrible. It gets stuff done quicker. Like we probably wouldn't be as advanced as we are in biomedicine, and technology wouldn't be as far along as it is as a whole without the inflation. But at what cost is that? So yes, we all get nicer things and have better medicine because of inflation, but what is the long-term ramification of that? And I'm sure we'll see that in our lifetime. All right, Traxy's answer to that is Jerome Powell did say that QE would only be used when policy rates are at very near zero. He made the remark during the Senate Banking Committee testimony on February. Response to, okay. Quantitative easing as a tool we use when we're at the effective lower bound, but we can't cut interest rates anymore. Yeah, I mean, that's a lot of words to explain the same thing. it's if you add more money to a system, it's likely that that money is going to help with the circulation. Circulation, put simply, is if it's easier to borrow money, it's easier to spend money. If it's easier to spend money, then businesses make more money. If businesses make more money, they hire more people and they expand. It's like upward spiral. What are the long-term ramifications of that? Well, 2% compounds. I mean, sure, it's only 2% inflation, but it compounds. So the later you get down, like, think about it like this. Think about it like an equity curve on your trading account, or for some people who are passive, like a retirement account. Most of the gains happen at the end, right? Like in terms of real USD gains. Like if you look at like a trading equity curve, it's pretty slow at the start, like pretty much any equity curve. And then when it starts to ramp up, and then eventually it just goes vertical, right? It's because of the compounding. Like 2% USD gain here is not much. 2% USD gain here is a lot, relative to where you started. So I think we're at the point now where we're getting closer to this portion of the inflation ballgame, and we're a lot further away from this. So what does that mean? It just means that anything that's traded against the dollar, Bitcoin, stock market, gold, pretty much everything in the fucking world, will just naturally seem like it's doing really good. But is the true value of that actually going up? Or is it just what it's traded against doing bad? And that's just talking about the asset, the effect that it has on assets. The long-term effect that it has on assets is actually sending them to zero. The reason being is because the S&P is made of a bunch of US companies, right? What do US companies rely on? People to buy their shit. If there's not enough people to buy their shit, then what are they? What is a company if nobody's buying anything? It's dusted, right? So that happens on like an individual scale from company to company, but it also happens on a macro scale. And when it happens on a macro scale, it's too late. You can't fix it. Well, there's a way to fix it, but it's a long, dark winter. There's many examples of this in history of, you know, countries bouncing back, empires bouncing back, but it takes a long time, and it's pretty fucking messy. Now, I don't want to get into doomer talk too much, because I still think that the markets in general, like just looking at the volatility index, it looks like we're going to have a good December. Maybe even, I mean, these markets could fucking rally a lot higher. So as far as assets are concerned, they still look pretty good. But as far as like the long term, like what will assets look like in 20 years from now? Obviously it's unknown. It's all speculative to a very high degree, but I would argue that it's quite dangerous. Will the S&P still be making new all-time highs every other week, or will it be making new lows every other week? That's something that we'll cross when we get closer to it. But the reason why I call them short-term fixes, right, like lowering interest rates or printing more money, is because they are short-term fixes for a long-term problem. And think about anything in life that you do a short-term fix for a long-term problem. What ends up happening later down the road is the long-term problem, can't be fixed by short-term fixes anymore. They don't work anymore. Think about it like you have a hole in a boat, right? There's a proper way to fix a hole in a boat, and there's like a quick way to do it, which you use. I'm not a boat expert, but they they use some sort of like glue. I don't know, but like they use like a glue to plug a hole, right? That can work for the short term, but that doesn't fix the problem. And eventually that hole in the boat will get so massive, glue won't fix it anymore unless you want the whole boat made out of glue. And it'll sink. So the boat's still fine right now. The boat will likely still be fine for the foreseeable future. But I think it's ignorant to ignore the fact that we're fixing the boat with fucking glue, and we're not properly fixing it. Look at the Dixie. Yeah, I mean, Here's the thing, right? There's two. So if the U.S. is going to print more money, and everybody understands that, then why has the Dixie been going up for the past couple months? There's two ways you can look at that, right? One, you can say it was already priced in. Market participants were already speculating that the U.S. was likely, due to the current administration and due to, it was likely going to head towards a point of QE. And so that's where this sell-off happened at the beginning of the year into the euro. That's a fair argument. I don't know how true that is. I would say it's likely pretty true. But then the other argument is, how does monetary policy and fiscal policy normally work in Europe relative to the United States? And it's applicable to more than just Europe. How does I'll just leave Bitcoin up a low time frame for the people that are just here for the stimulus and the dopamine. They don't want to hear me talk about macro. How does Europe normally behave? How do the central banks in Europe normally behave relative to the United States? Well, whether you want to admit it or not, they usually copy it. If the U.S. is leaning more towards looser policy, it's likely that the Europeans will also do the same. So what that means is, in simple terms, if the U.S. has decided to print more dollars, it's likely that soon, or if it hasn't already happened, it's likely that the Europeans are going to print more euros. So if the Americans are going to print more dollars and the Europeans are going to print more euros, then the effect of the currency exchange of the euro against the dollar, shouldn't be affected in a major way. But all this noise and stuff that I'm talking about, the reason why I preface it with most of it not being that important is because the chart tells the story better than any of that. All of that is noise and speculation by like classical economists who think they know what they're talking about, but they might know what they're talking about to some degree. But what's more important is, what does the chart look like? Because this is not about noise, and it's not about fabricating any truth. It just is the truth. Whether or not you want to buy euros from dollars or sell, if you want to convert your euros to dollars or dollars to euros, the going exchange rate is the fucking going exchange rate. It doesn't matter who says what, it's what is the fucking price. And then once we've established that the price is the king, then we work on trying to see how it behaves and what could lead to movements in the price. That's already printed in the chart, not necessarily, who says what. Because in any financial instrument, you'll have two sides. You'll have people that believe that the price will go higher and people believe the price will go lower. And they both might have good arguments. But instead of trying to discern what is more likely based off of those arguments, use the fucking chart, because the chart doesn't lie. Especially when you can use the chart. Everybody has an opinion, dude. Price doesn't have an opinion. Yeah, and that goes more into legacy. Like, if you look at, is the United States actually producing a lot? Is it manufacturing a lot? Like, how much value is the United States actually giving to the world versus how much is the world giving to the United States? I would say that the U.S. is pretty overvalued. But that's typically happens, right? In legacy, that happens. Anytime there's a legacy for anything, it usually runs a lot longer than maybe it quote-unquote should. And who knows how long it'll actually run. It could run for your whole lifetime. You can make the arguments that, okay, the U.S. is overhyped, other countries are better for XYZ reasons, and that might be true, but it doesn't really fucking matter because you can't time it, and it's very possible that a legacy built like the United States that has been around for so long and has such a massive stranglehold on the global markets could likely continue to be the dominant force regardless of its viability for your whole lifetime. It's possible. Look at the Romans, right? All of you guys know probably a decent amount of history about the Romans. When Rome started to look weak or show cracks, did it fall the next day? Or did it last multiple new transitions between emperors and last a much longer time than maybe it should have lasted? And this is the same thing in trading too, right? Like, if you think something's going to go up or you think something's going to go down, and you're trading it, you have to wait for Let me see if I can put this in a chart. But the chart I was talking about earlier on stream, ENA, right? This one. So this chart looks like shit. It'll probably go lower, right? It'll probably go lower. But does that mean you can short it here? You have to wait for it to kick up first, and then you can look to short it. And it could do this, but who knows? Oh, I feel a sneeze coming. But let's say, like, you know, legacy with the United States, it could be going down, but what if it goes up a lot more before it goes down? What if it goes up for the next 20, 30 years before it goes down? So this goes to say, the whole point I'm making is being right and making money are two different things. And just because PE ratios for the Mag 7 are completely out of whack, or what one person would consider out of whack, relative to maybe some things that have more value with better PE ratios, it doesn't mean the market will realize that. There's legacy in the Mag 7 as well. You don't think Apple has fucking legacy? Apple, you know, when you, from a fundamental, like if you analyze it from a fundamental perspective, maybe it is way too fucking overvalued. And maybe there's other things that should be valued higher just based off of, you know, how much value it provides. But does it really fucking matter when Apple's just going higher and higher? Like, I don't think we're in, the era we're in right now is not rewarding to fundamental analysis. It's rewarding exuberance. So you can either be like, you know, cross your arms and be like, well, fuck the market. If it's not gonna, if everyone's just being a dumbass, then they're just being dumbasses. Or you can be like, all right, you know, how do we make money? And that, the best way to do that is to look at the price. Yeah, I mean, the price is fucking high, right? But what is high? Because it's all relative, right? What is high? What is overbought and what is oversold? Those things don't exist. No such thing as overbought. There's no such thing as oversold. If you accept that anything can happen in the market, then you can't accept the fact that something is overbought or oversold. Also, Amazon's doing great, by the way. Let's go, Amazon. I mean, I don't really agree with the business practices of Amazon, but as a shareholder, it's doing quite nice. Yeah, you gotta long the top, duh. Dude, people have been long in the top, have been getting fucking rewarded. And if you're unsure, like, you know, is it too late to buy or all that jazz, this is why I just use the VIX, man. This, if you can master this one chart, you can master all the charts. This chart here, the volatility index, this tells the story for everything. There's a reason why I say that almost every stream, because it's fucking true in my opinion. It's very important. I mean, almost every asset is wrapped up in the S&P 500 anyways. I tried to short the Goog. Did you short it after Buffett said he was buying it? I mean, the Google play, you know, you had equal highs, technically a little bit of an insignificant higher high, so you take out the low that created it, right? I believe I talked about this on stream, but take out the low that created it, and then rebound. Then Buffett buys in too. You get the Buffett pump as well. And it's not just about Buffett buying in, it's about all the people that fucking ride his coattails and buy in after him. It looks good where it's at though. Let's see. Some equal lows. Doesn't look as good anymore, but actually looks pretty good for a hedge. I don't know. It's hard to short anything in the Mag 7 because what happens is it goes up and to the right. And is it going up to the right because it's that good of a company, or is it because it's traded against the US dollar? Check DM. I don't read DMs during stream. Unless it's like from somebody I know. Solana's pretty interesting. I saw your tweet on Solana, Traxy. Yeah, I see all those equal highs too. But, okay, is it not similar to these equal highs on Biddy? All these equal highs on Bitcoin? Pretty similar. But yeah, Solana looks like you get a pump going. The high time frame Solana chart still looks like ass, I'll be honest with you. It still looks really bad. But that doesn't mean it's going to dump right now. It's another one of those scenarios where, like, I think Solana, the chart doesn't look good, man. It really doesn't. But that doesn't mean it can't rally a bit more before it actually does crash. And then maybe if it does rally a bit more, it can hold it and then continue and change my opinion. But while I do think this chart looks really bad, I don't think it's in a spot to short it right now. I think it's too late to short it. If it rallies a lot, and then we see how it behaves here, then there's an opportunity to short it. But I mean, just look at this chart, dude. Maybe you're not that experienced with looking at charts. I mean, what does this look like to you? Does it look good? It might look good because every time it comes down here, it bounces off of it, right? But why is that bad? Because if it goes under there, it's GG, right? If everybody sees this as the support, what happens if it goes under the support? Blood on the street, right? It's a race to the exit. But yeah, there's ways for Solana to look better. Like, the chart could convince me otherwise, but I need to see that happen. I can't just have a bias towards something because I like it. At least in trading. The real world, sure. But you know, trading is about making money. Not really about the emotions. But yeah, I mean, if we get to here, depending on how Bitcoin's behaving, depending on how the S&P is behaving, then this looks like a good spot to hedge. Maybe you're a big fan of Solana and you think it's going to do really well. Well, you might be right about that. But what if you're wrong about it? And if you are wrong about it, do you want to protect your downside? A way you can protect your downside is you don't have to sell your Solana, right? You can hold on to it. Or if you have a long on Solana, you don't have to close it. But what you could do is you could take a small bet against it if we get up here and look to hedge against it. Because what's the worst case scenario, right? If you took a hedge and you bet against your spot holdings or your longs, and your hedge gets invalidated, then you're going to be printing, right? Your spot bags will do fantastic, your longs will do fantastic. You'll lose some money here because the short didn't work. But if the short does work, and say it's just a colossal dump on Solana, then at least you're more protected. You don't experience as much of that downside. In fact, if you think long-term Solana will eventually bounce back after a bear market, then you can eventually close your short for a profit and then Solana can come back up. Plus you get funding fees and all that other stuff too. What do you think about Zcash? I talked about Zcash. It doesn't look good right now, but there's a path forward where it could look good. Aggressive play is using the current meta, which is looking for equal lows. Dangerous to do on a big account, doable on a small account. And if you don't want to take this play here, then you wait for the regain afterwards. Wait for the rejection on the other side, which is where short liquidity got taken out. So I usually don't go through the basics very much, but I'll go through them real quick on Zcash because a lot of people care a lot about Zcash, and I get it, right? Because it's been one of the few altcoins that's pumped while everything was dumping. Alright, so just when you look at a chart, maybe you don't care about Zcash, but what I'm about to do on this chart, you can use on other charts that you do care about as long as there's a good amount of leverage and it's a decent market cap. That way there's some probability there. It's not just completely random. Like a new meme coin chart's going to be 100% random. Well, 99% random except for the rug pull. But I look at a chart like this, just establish where you think people will take action. Where do you think people will buy if it goes above it? Where do you think people will sell if it goes below it? Or where do you think there'll be a motion in the chart? And then also, not only people actively pressing the green or red button, but what about people that have already set invalidations? So what about people with stop losses or liquidations? So all of that put together, where do you think all those market participants are likely to take action at the same time? Top side is pretty obvious, right? Top side's pretty obvious. Bottom side is a little bit more tricky, but it's become more obvious as the data has come in the last couple days. The reason being is because it could have been here, but now that we've flushed this out, it can no longer be there. So it must be here or maybe here, right? But the way I look at charts, more importantly, I want to look at this first. Maybe this can become relevant, but I don't know yet. So on the higher time frame, we know where people are likely to get invalidated. Okay. And then the thing that has been happening the last couple of years that I've noticed, and I've talked about this countless times, is we're seeing sort of how price action behaves, changes over time, and we've seen a lot more equal lows and equal highs. Evidence of that right here on Zcash, equal highs, right? All right, so I've already talked about this. It'll be in the VOD. I'm not going to go through everything again, but let me explain the lower time frame now. So we can agree that it's likely that a lot of people got fucked right there. I mean, you can see it on the fucking candle, right? That giant wick. Arbitrage bots step in. Imbalance supply and demand, but not really, because it eventually dumps. Anyways, a lot of people lose here. And we look over here and we see a low. So what we could see is sort of that equal low meta, just like we saw the equal highs. And then regaining where people lost. So this would show like everybody's selling at the same time, but the price didn't do this. Right, all these people lose at the same time, but the price didn't fall off a cliff. That's already interesting. Not interesting enough though. Then we want to see a reversion back to the mean. If you want to be really stringent on it, then you look at the other side. Where did people lose on short sales? So where did people lose on the other side? So we had a wick on the top side here after forming equal highs. We have a wick on the bottom side here after forming equal lows. So this is where there was a lot of buy side liquidity, but the price didn't go straight up. There's a lot of sell side liquidity, but the price didn't go straight down. So now both these areas are interesting. So what you can do now is you can wait for like sloppy fluidity from the bears to push it back down after confirming that you've pretty much reverted back to the mean, and then you wait for the retest here, and then it's much more confirmed that this is going to do a lot better than buying it here. Buying it here, you'd get it at a cheaper price, right? But you don't know that it's going to be a good probability of the trade working out until you've seen this stuff happen first anyways. So you're sacrificing buying at a slightly higher price, but the probability of it working out is much higher, and there's a chance that this happens if you buy it right here. I mean, there's a chance that it happens here too, but it's just a little lower chance. I reckon most people indeed would put stops at that nasty wick. Yeah, I mean, it's not just stops. Stops are important, liquidations, and then also just people pressing red and green buttons. Where do you think a lot of people will press the same color button at the same time? Because right now, where we're at currently, on any of these charts for the most part, at least the ones we've looked at, there's a mixture of people pressing green and red, disagreeing that the price will go higher, or the price will go lower. And just the orders that you see come in, it'll be a mixture of green and red. But at what point in the chart is it all red, or is it all green? At what point in the chart does everybody do the same action at the same time? And then what happens after? If it goes straight down, it goes straight down. There's no opportunity to buy it. If it doesn't go straight down after everybody sold, why didn't it go straight down after everybody sold? Accumulation, demand, whatever you want to call it. But it's basically just a lot of liquidity. Just look at the Bitcoin chart, man. Why on Bitcoin did we not go higher here? The stage was set to go higher. You had all the short sellers in the same spot. We pumped. Pretty strong. If you're just looking at it like that, those candles are pretty strong. But it wasn't enough. I mean, look at the pump before that, right? Everybody has the same short sell invalidation. There's much more significant of a pump than this, relative to all those short sells being in. Like, look at the difference in the size of the arrows. As simple as I can make it. So does that mean that it's going to crash to zero now? No, it doesn't mean it's going to crash to zero, but there's an opportunity to short it here depending on how the price looks. And there's technically an opportunity to long in here, but this is a much more aggressive long. The better one is using the high time frame, which is the same logic again. Zcash Moonboys. Yeah, Zcash Moonboys are they're a strong cult, man. A strong cult. Now they're being put to the test right now, and they will be very soon if this thing cracks. Like if we do this, there's a lot of arrows pointing down. I don't really need to add any more, but if we do that, this is where Zcash holders are put to the test. Because one of two things happens here, right? It holds, and then we'll likely get another all-time high in the future, or back down to where it came. That's where the test happens. Pretty much going underneath 420. Once you go under 420, as funny as it is, then we'll have our answer. How many people will press the red button at the same time when it goes under 420? And will that be enough? Or will that be significant enough to drop the price? If it's not, then it's either not as many people press the red button as maybe we would assume, or there's accumulation happening. The demand is a lot stickier than assumed, even when you have a lot of supply coming in. So those moments really give you an observation of what's really happening on the supply and demand. If the chart looks like it's going to fall off a cliff, and it starts to do that, but all of a sudden it reverses, it shows you that there's a lot more demand than maybe you assumed. And what is demand? I mean, demand can come out of the woodwork. Think about it like this. When you look at a Bitcoin order book, do you think there would be more buy orders in the order book right now if Bitcoin was trading at $10 a coin versus where it's trading right now? There certainly would, right? So you don't know how many buyers are truly out there until it's put to the test, or how many people are willing to convert into being a buyer. How many people are, trading gold and silver and will hop over to Bitcoin if it dumps enough? The books will tell you, where market makers are willing to buy, and some retail market participants as well. But you don't really get the answer to what does that true demand look like, or that true supply look like, until it's put to the test. And then once you have that test, then you can speculate on what it's going to do in the future. That's why when Bitcoin makes a new all-time high and it's lackluster, I mean, this one was pretty good. I was actually kind of surprised that I got fucked that hard. But after the structure broke here, it was pretty obvious. But if we're going for another all-time high on Bitcoin, why isn't it a lot more? Where's all this supply coming from? People that maybe would not have normally sold are now selling. Same thing if we go for the lows. And could be frustrating, right? But it's one of the beauties of the market, because you can't know for sure. There's no mathematical formula you can input that's going to tell you how the human crowd is going to behave when it hits a certain point. How much new demand or supply is going to hit the books when we get to a critical spot? That can't be calculated, because you have to know what everybody's thinking. Or will think. Not only what they're thinking, but also what will they think. Now, you can have probabilities of what you think is likely going to happen, but it's not a certainty. I do that all the time, right? Probabilities is the name of the game. What do I think is likely going to happen? How do I think the crowd is going to behave? But at the end of the day, all that is a probability. I mean, how many times have you guys seen me be wrong about things, right? It's because I can't guarantee that I'll be right. Now, just because someone is wrong, quote unquote, that doesn't mean that they don't make money. It's just sometimes in trading, sometimes you lose money, sometimes you make money. As long as your equity curve is up to the right, it doesn't really matter. Talk about silver? Yeah, man. There's not much to talk about silver. I mean, it's following the arrow. This was the last spot to hedge. I talked about hedge, squeezed, rally. The fact that they've halted trading and stuff, I mean, come on, man, that's bullshit. You and I know that's most likely not a cooling issue. You know, market makers just weren't ready to provide. You know, there's a lot of offers with no quotes, and a lot of offers with no quotes. What the fuck happened, right? Time to shut it down. That's what I think happened, anyways. Like, you can try and stop a train using that kind of, you know, heinous manipulation, but the silver train has been cooking for way too long. You can't stop that train. You can try. Like, think about GME, right? GameStop. GameStop demand was a powerful force, right? And they stuffed the force through heinous manipulation. The same thing that happened on silver, but silver is a fucking force, man. It's not. It makes GameStop force look small. Silver has been long time cooking, man. This is something that you can't stop with manipulation. People are gonna fucking start buying silver at the jewelry store. I mean, it looked weak at times, right? Like here it looked a bit weak, here it looked a bit weak, but then, you know, flip back to bullish here after this good fluidity. And if you guys have been around, I've been bullish on silver since around here. There was some fucking divine intervention that came in at here and here. I mean, it was insane. Like it got so close to teetering up, breaking, but instead of like right on the line of teetering of breaking, it showed immense strength. That kind of stuff is pretty fucking rare in a chart. It's normally not that cut and dry. But, you know, it did it again here, and fucking send it, man. If you guys were here over the summer for silver, I mean, it was up nearly 65% when I started raising the green flag on it. Now, I could have been wrong about this, right? Like, if this broke here, I would have been wrong. Certainly. But that's the thing is, like, you know, if I was wrong about this, okay, I lose some money, move on to the next trade. And then if I do nail a 65% move, then I can be wrong a bunch of times and it doesn't matter because this is going to pay for all of it. But yeah, man, silver looks good. What you don't want to see now in silver, though, is you don't want to dip. You don't want to dip below these highs now. Because that would show an imbalance of supply and demand. So you don't want to go under 54.5 again. If it can maintain above 54.5, it's going to fucking fly. Yeah, Traxy was another one who was bullish on silver. I think we had a conversation about silver a while ago, right, Traxy, where you're like, I know this thing's going to fucking rally, but I don't want to be wrong, so I'm going to go into bonds or something like that. I think it was on your stream when I came by and we talked about it. That was months ago, though. I mean, bonds are still safe, too. There's nothing wrong with bonds. If it goes below, yeah, it depends on how violent it is. Like, failing this would be really, really a bad look. But yeah, maybe something like this if it fails it. And then back to the drawing board on rebuilding structure. But yeah, Traxy knew about silver too. Like, you know, really, I think one of these streams a couple weeks ago, someone was like, everything's up so much, you know, what can I buy? And I was like, well, silver looks pretty good. But now the question is, if you don't have any silver, do you buy it right now? That's a decision you have to make, because I have to wait for more structure to come in. Like, the play on silver here took how long? It took like over a month before it actually came to fruition, so I can't just say yes or no right now. It depends. Like, if we go up and form a new structure and we do the same kind of jazz where we dump but it holds in the proper areas, and now I'll say it looks good again. Then send it again. You look at virtual. That's really good volume on the pump. Good fluidity. Not that good of fluidity on the dump, actually. It's pretty good. Stack liquidity at the highs. That's good. That's good. That's good. This is kind of messy. But it's fine. There's a lot of fucking breathing room. Looks like a horse. I'm trying to see it. I don't see the horse. Anyways, yeah, you need to reclaim this. It's today's move on this coin isn't too good, but yeah, you got stock liquidity. You do have room to breathe, though. This is tight enough, I think, right? Yeah. So adding on would look something like if we get a new low, it's insignificant. Then you get the relative strength shows you bullish divergence. Then you can reclaim this. If you reclaim this, yeah, the fluidity is not that good on the bear side. Then it looks good, man. If you get bold here, this is a good add-on spot because you have a lot of room to breathe for it. Again, great volume. Top side looks fragile, and it looks like in the future it'll probably look fragile again because of the front running of liquidity on the structure. So, because this was front run, invalidation should be stacked, resting right below the liquidity. So it means that you can dive into liquidity. And it might not even dump from here because it's already going to be the third tag of that area, right? 1, 2. You can even include this one over here too, but it's not as relevant. But it might not even do that. But even if it does do that, then you've got another tag of it. So you've got short sellers in the same spot as these guys, short sellers in the same spot as these guys. So maybe a dump here, but a dump here, particularly if it's messy, and it's likely to be so because of the front run liquidity, would not be that bad. You would have to start building good structure on the bottom side though if it dumps significantly. So it's just like taking it one step at a time, right? So if it dumps from here and say it like holds this well, then it's gonna fucking moon. It's going to the moon because the volume backs up another leg up. You have a spike in volume. So if all these things transpire, then launch it. And if it does launch, the volume should increase in order to show a healthy trend. So if it does go for it in the future, I'm not looking at it, make sure that the volume looks even higher than the previous move, because that shows it can go for it again. Bullish at the moment. I want to see if this thing does dump more. I want to see how the structure behaves at 89, 88 again on Biddy. If we dump to like this, I want to see how it behaves. If it behaves well, then it looks good for another leg up. If it doesn't, then another leg down. Lower than 80 or above these highs at 94, depending on what happens here. I know that's really simple, but it's a test of the structure. The next test of the structure. There's already been 2 so far. The first 2 were kind of sloppy. A strong third one though would remedy my doubts on those previous tests. So if this fails though, it's going to get nasty. If this holds, this is pretty much an area where you can expect volatility to follow after consolidation here. And not just volatility, but volatility with conviction. And it might happen before that, right? It could happen before that if it's really strong. Sort of the microstructure that we built here. It could. But it's more of an aggressive play to go for it right now. If you want to be more passive, you wait for that. And it's not unreasonable to be more passive on the approach because of how much downside we've had. So it's going to be harder to restore the market sentiment. If it's harder to restore the market sentiment, you have to defend it at a lower price. If it's going to be defended at a lower price, then 88.6 to 89. Maybe 89.5. On Poly Market, or I'm guessing there's a coin called Poly. Is that Matic, right? What's the ticker? Oh, it's just Poly now, right? Wow, I am out of touch with these fucking altcoins. What's the ticker for Pol? Thank you. I'm guessing you shorted this bad boy? Or are you talking about you took a bet on Poly Market? This looks like dog water, dude. Look at that fucking pump that came in off open. Yeah, I mean, it's at the relative lows, right? If you get a new all-time low on this bad boy, and you can reclaim it, then talk about it being back in business, but until then, looks pretty bad. You took a bet on Poly Market and then hedged it with futures. That's the future. Going on Poly Market, making a bet, and then hedging it with futures. Oh, you redeemed a ticker. Could you do a fresh look at Tesla and draw some lines? I want to compare. Yeah, I can look at Tesla again. Yeah, the Tesla plan's working out fine right now. You want me to go from the beginning? Okay. Alright. So, I'm going to imagine I've never seen this chart before, which is pretty hard to do, obviously. Okay, so looking at Tesla, just like you would any chart, trying to identify where a lot of people would do the same thing at the same time. I think based off the relative volatility that we've seen in the past, it's pretty apparent that these highs, this one here and this one, are relatively close together. If you want exact, or at least close to exact, like from 475 to 488 a share on Tesla. But based off how much movement we've seen in the past, it's not crazy to assume that these two highs are close together. Okay, so what does that mean? It means that market participants, regardless of the language they speak, are all looking at that area as quote-unquote resistance. So does that mean that we should sell there? No, the opposite. It's likely that if we go above it, people will all press the green button and buy at the same time, or shorts will get squeezed, which operate as buying, right? In the options market, when you're betting against something and you close it, it operates as a buy, or on the other side, I should say. So it's likely that if we come back here, there's a possibility that we'll dump from it, but that's not a bad thing because it just makes even more people look at it the same way that I was just describing, which is if it goes above that, it's a frenzy. Okay, so we've established that on the top side. So that looks good, right? Now let's look at some of the bottom side stuff. So this is pretty fragile down here. At around 200 to 220 a share is pretty fragile. Why? Because it's the same logic. Everybody who, you know how I described how people are thinking about up here? Down here is the same thing. This is the support, bro. Don't worry, it's going to hold. That's a type of logic. But then if it doesn't hold, what happens? Everybody sells at the same time. Everybody presses the red button at the same time. We could see that. The fact that the price is nowhere near that is a good sign, right? There's another instance of it happening here as well, but it's not as well defined. So it's not that much of a pressing issue, but it's still something that should be noted. And then more recently, we saw another example of that. But what's the difference? This one here has already been taken out. Okay, so is that important? Well, it depends. What did the price do afterwards? If the price did this, then it wouldn't matter. But why did the price not do that? Maybe the demand is more sticky than was assumed. So we mark out that level. Because the fact that the price did not go significantly lower shows that there was a lot of sticky demand. There's a multitude of reasons as to why this level is important. You could look at it from a multitude of ways. I mean, if you put yourself in the mind of a market maker, or heavy accumulation from an institution, or to put it simple, where was there a lot of sell liquidity and why didn't the price go lower? There's a multitude of reasons as to why that happened, but why it happened is not nearly as important as how to take advantage of what to do next. So now you could look for like a reversion back to the mean. So maybe you're not completely convinced, right? There's a couple things I missed here that I'll talk about. I should probably talk about it now before I continue here. I'm sorry, kind of all over the place because it's a lot to explain. But as far as, you know, what happened in the past in those same scenarios where lows got flushed out and how did the price react afterwards? So you see how this got flushed out, how the price reacted afterwards? These are still technically important, even if it dumps a lot. It just depends on if we can get back above them. So, if this doesn't hold, for instance, you know, you got fragile structure here, then you could see a test of this. If this doesn't hold, then you must hold this or it's lights out. Anyways, going back to this example though, you want to look at the other side now. So where did people get cleared on the other side? I have to zoom in now to show it to you. So a couple instances, right? People got flushed out here on the top side. Or where did everybody press the green button at the same time? And what did price do afterwards? Why in both these scenarios did price not do this? Why didn't it do this? Or here, why didn't it do this? Because this is the same logic, just on a smaller scale of everyone should press the green button at the same time when the price go higher. So it's still important to revisit it. So now it'd be the same way around like this. So you could wait for like sloppy fluidity on the bear side of the market and then look for good fluidity on the bull side of the market, which would be the retest of it. This isn't that good of an explanation because there's a lot of moving parts, but that's why I'm trying to show it to you with the visualizations to try and make it easier to understand. We were promised marbles. Yeah, we'll play marbles at some point. But then you need to understand like the relationship between the last couple weeks worth of data relative to like the last couple months of data. Like how does the zoomed in picture fit in with the bigger picture? And is the bigger picture relevant? Depends on where we go. If we don't need to go outside the bounds of the smaller picture, then it's not as relevant. But if we do, then it becomes extremely relevant. So everything I'm doing here on the chart, to make it simple, is I'm trying to put myself in the head of the crowd. What is the crowd thinking? How will the crowd behave under stress? And then, after I've established what I think the crowd will do under stress, how does the price react to it? Because there's two types of market participants, right? At the very fundamentals, the very core, there's two types of market participants. There's people that market buy, and there's people that limit. They market order or they limit order. How are the two dynamics, what's the relationship between those two dynamics? So when everybody's market ordering at the same time, how does the price react? If it's dramatic, then we'll have volatility. If it's not, then there's an opportunity. So, like every little scenario here carries a little bit of nuance with it. Like the reason why I drew this arrow diving deeper into where the fluidity would be tested is because the front run here. So you have invalidations here from local market participants in the last week or so, technically the last 2 weeks, which means that you should slide in liquidity. It's not going to be as smooth of a landing. Just because of greed that happened. So low time frame greed usually leads to high time frame mess, but it can still be sorted out. And then this one actually would be a clean test for the most part. There's a little bit of front running liquidity, but it's certainly not the same because it's not even an equal low. But this one, if it is put to the test, should be clean. And if it's not, then we go and take out all the bottom side. Probably a better way I could have explained all that, but because there's so many moving parts and nuances change depending on the individual chart. If you have like specific questions on something in particular though, it'll help me be able to explain why I think what's important, and because I didn't really explain everything in exact detail as to why I was marking things the way it was, but or Glem, if you want, you can send your chart. And if you're new to the stream and stuff, it might be hard to follow along. I understand that. It's just, it's not easy to explain my entire thought process as quick as I can draw it out. I can draw out my thought process quicker than I can put it into words, if that makes sense. So I could spend a lot of time on each individual drawing and explain that out, but a lot of people have been here for a while and probably don't want to hear me do all that. The important part is just knowing when the sentiment shifts. At what point in the chart does do people start to get scared? And at what point in the chart do people start to get exuberant? Because the price is just controlled by the market participants. You can argue market makers control the price or whatever, but not really. Like, they're just trying to get delta neutral. There are some market makers who are, you know, have directional bias, discretionary type of stuff, but in reality, market makers are just trying to squeeze out the spread. They're just trying to make a buck while staying delta neutral. And while that will have ramifications on a lower time frame, once the high time frame stuff comes into question, then it's ultimately up to the supply and demand of the market. Can you say names? What do you mean? Names of what? Like market makers? There's a lot of public market makers. Depends if you mean in crypto or if you mean in legacy. I mean, Citadel's a big one, right? In crypto, Wintermute's a big one. In crypto, though, there's also like ghost market, like there's anonymous market makers that just stay out of the sunlight, stay in the shadows, because they can. Legacy, you can't really do that. I mean, you can, but not as simple from a legal standpoint. How do you know which level is hold exactly and which one will be swept? How do you know which level is to be hold? It depends on what happened, right? So like, this I think is higher likelihood of holding if you're bullish. Like if you think Bitcoin's going to go up, then we should be able to hold it here. From 88.6 to 89.5. That should be held if it is actually bullish. And then what's a scenario where I think it could sweep it? Tesla's a good example. So it's the same logic, right? If you're bullish on Tesla, then it should hold like 370 if it's put to the test. 370, 373, 370. But the difference is based off the relative. All of this is relative. It's based off the relative volatility in the past. The difference is how close are these equal lows here to this line? Based off the relative movement in the past. Like what is close? It's all relative, right? So I would argue that these lows are close to this line. What does that mean? It means that market participants who are on the more zoomed in picture, like they're looking at the last couple weeks, view this as support. If we go under it, they might sell. If they do sell, then it'll be harder to catch it on the higher time frame. Like this level comes all the way back from January. Actually, December 31st or January 1st. It comes back like, almost a year ago. So if this didn't exist here on the local, then I would not expect a sweep. I would just expect a tag. And that's what I'd want to see. It could still sweep, but that's not good. Because when something's put to the test, you want to see how decisive the victory is. So this would be the optimistic scenario if this didn't exist. If I see something like that happen without this existing, that shows me an immense amount of strength on the demand side of the market. Looking like it's a higher probability it's going to go higher. But yeah, the scenario like this is like, all these people from the last couple of weeks might sell at the same time. It might, dip into it a lot harder. So we could see like a sweep lower. When that happens, it's a bit more difficult to grab the trade because you have to scalp it a lot of the time. I mean, both these scenarios, you technically have to scalp it, but there's certain scenarios where this would only be a scalp. There would be an opportunity to take a swing trade on it, but trying to think of an explanation or like an example of where that would be the case. There's certain times in the chart, I think there's recordings of me talking about this more in detail, so where I explain it. There's certain times in a chart where you could take a scalp or a swing trade depending on what the market gives you, or you can only take a scalp. And the defining characteristics of between the two are where's your stop loss going to be? If you can't find a feasible stop loss that would produce high risk reward, then you must use a lower time frame stop loss, which means that you'd have to scalp. And scalping can be dangerous for newer market participants because you could get tagged out a couple times before the move actually works. Meaning, let's say that you want to trade this, right? So this is a good example on Bitcoin because you could swing trade this, but your expectations of grandeur would have to be pretty far along the line. But so the two examples is if you wanted to swing trade this, you'd have to have really bullish expectations because the only stop loss you could use is like right here. I mean, what data are you going to derive when we go straight up? Now the issue with this one is you got shared stop loss with a bunch of other people, but let's ignore that for now, just for teaching sake. But to get like a 3 risk reward, where do you have to speculate? You have to speculate price going all the way up to 96,000. So you buy in at 88.5, right, on Bitcoin. Stop loss at 86.3 with the expectation that the price will go up to 97. You need a lot of people buying after you for that to happen. So you could technically do it, like you could swing this, but your expectation is that we have to break out of the range, which is a big assumption. So how could you do it if you don't want to expect Bitcoin to have that much strength? You could scalp it, right? And so depending on what happens here on the lower time frame, because right now we're on like this is the hourly, right? So each candle represents an hour. But if each candle represented 1 minute, and you're down here in the box, you could see like, you enter the trade here on a scalp, use the local stop loss, and then price does this, and then use the local stop loss, and then price does this, and then it finally works out. And then it prints like a lot, right? Well, in both these scenarios, you'd have to get tagged out twice and take a third stab at it for it to work. Now, your risk reward is going to be a lot better, but what happens sometimes is people will lose the first trade with regular risk management. Okay, fine. They lose the next trade with regular risk management. Now, all of a sudden, they want to size up because they can't stand the idea of losing money. So now they risk a whole lot more on this third trade, and sometimes it'll work out, and they'll get bailed out and potentially build a bad habit. But everything's a probability, right? So what if this level doesn't hold and they size up on the third one and it does that? Now they're in deep water. It's a lot harder to crawl yourself out of that hole. So that's why I say it's dangerous for new people to scalp, because they might not stick to their principles on risk management when they're in combat. Just because this is an area that's high likelihood of seeing Bitcoin reverse does not mean that it's guaranteed to reverse there. Trusting your high time frame plan is important, but understanding that it's a probability is also important. It's not a certainty. You could spend 1,000 hours looking at this Bitcoin chart trying to come up with a perfect fucking plan, and it can still lose. It's not until you accept that you're going to be in for a lot of pain. But here's one of the beauties of this, right? If you can manage it, there's a lot of money on the table. If you can manage to, say, you keep your same risk management on all 3 of these ticks, right? So now you put your stop loss at the low because you're scalping instead of the swing. So what does that do to the risk reward? The previous risk reward was 3. Now it's 7, 8 risk reward. So In the swing trade example, the zoomed out example, you're looking at about 3 risk reward. But now, if you use the local stop loss, you're looking at, 8 risk reward, 7, 8 risk reward. And, that's sometimes not worth it. But not every time you do this are you going to get, it's going to take 3 tries. Maybe if you get on the first try, right? Now your risk reward is fucking astronomical. Right? And nailing one of these monsters, I mean, this is quite dramatic because the prop target is speculating really far high, but nailing one of these at like 44 risk reward, man, you only got to win 1 trade every financial quarter and you're getting fucking paid. I mean, it depends on how much you trade, right? But like 1 monster winner like that will pay for, so many fucking losing trades. The question is, can you stick to your risk management long enough until you hit the monster? Most people cannot do that. But that's how it works. If you can stay disciplined long enough till you hit a monster, then it'll all click in your head. It'll click. Like, oh, this is what it takes. That's why I always say risk management is the hardest part, because that one thing is it is the hardest part about trading. Nobody wants to go to work and lose money. That's why everybody gets a fucking job. Who the fuck wants to sit down, work all day, and then at the end of the day, instead of making money, they've lost money? Who in their right mind wants to do that? It goes against the Puritan mindset, right? Everything that you've come to understand. Input in, output out. But in trading, it doesn't work like that. You could grind all day. You could grind all week and lose on the week. It's possible, man. Even if you're really good, you can have a bad week. You can have, I mean, honestly, you never know in trading. Because it's variance. With variance, anything can fucking happen. Let's say you sit down at a poker table and you're just objectively the best player at the table because, let's say that everybody at the table had to take a quiz on poker, had to take a test on poker. And the AI is going to grade the paper. So AI is going to grade the paper on, who knows the most about poker. Well, the guy that knows the most could sit down at the same table every single day for a week and lose every single one of those days. Because there's variance. The question is, can you withstand the variance? And you get better at it over time. Nobody's fucking perfect when they first enter the world of variance and risk. Some people are, unicorns, but it's very far and few between. Exactly, it applies to business as well. Even venture capital, right? Think about venture capital. Like, you think, this is an example because probably everybody knows about this, but like Shark Tank, right? You think every business the Shark Tank people invest in is going to be a home run? In fact, I would argue, I haven't looked through the data, but I would argue that the vast majority of the ones that they do invest in are the exact opposite. They just fall flat. The same thing in VC world. Same thing as anything with variance. But what's the truth of that? You only need one Uber. You only need to get in on Uber, one play on Uber where you get in early that pays for all the other losers. It's the same thing in trading. Let's say you have 100 million, right? And you put 1 million in every single different startup. You invest 1 million in every single startup. And one of those startups is Uber, and 99%, the other 99 of them are fucking dog shit. Well, if you got in early enough with 1 million in Uber, and 99 and the other 99 fall flat, that one play on Uber is going to pay for all the other 99. That's just one example. Like, there's new companies all the time that launch. But if you're in the VC world, or if you're in the trading world, business world, yeah, anything with variance, you should know that any individual trade, any individual business has probably a higher likelihood of failure than succeeding. Now, should we cry about that? No, we just need to accept it and use appropriate risk management. Don't put all your eggs in one basket. Yeah, Albie, that's true. Those are some of the emotions that come in. Like, some of the emotions that come in when you're trading is like, well, sometimes you'll be nailing every single fucking thing. Other times you'll just be getting fucked every single way. It's not what you do so much when you're nailing everything so much more than it is when you're not. That's important. And I said this in previous streams, if it feels like the market is like stopping you out and then reversing, it's not necessarily that you're being hunted. If anything, it's indicative that at least you're finding a key level. The key level might not be your entry, but it's your stop loss at least. You've identified something of significance. If you immediately get stopped out and the price reverses, you're knocking on the door of finding what's significant. And by the way, that happens to everybody. It doesn't matter how fucking good you are. It's going to happen to you. And no, it's not the market coming for you. Do you think people are willing to risk absorbing an amount of money just so they can stop you out? Unless you have a massive fucking position, and even then, not really. Like that James Wynn guy, he always thinks the market's like, there's people coming after him and stuff. I mean, maybe there's some truth to that, but more likely than not, there isn't. I'm not trying to be a dick to the guy. It's just, everybody in the market is trying to make money. Nobody really gives a fuck about personal grievances. No one's like, oh, look at that guy. Let's all go get him. Because what's at risk by doing that? What's at risk by doing that is by them getting fucked themselves. Because there's no guarantee they're going to get that guy. What if the market flips on them? BK thinks the market maker is after him. Yeah, guys, that's like, there's a little bit of truth to it, but there's also a good amount of delusion. Particularly if you're on a smaller account. Even if you're on a massive account, there's still a little bit of delusion to think that everybody's trying to come and get you. The market's just fucking difficult, man. It's brutal. Everybody who hops on the market is trying to make money. This is where you find some of the smartest motherfuckers on the planet. Of course it's going to be difficult. Why would you find the smartest people on the planet on the market? Because there's the most amount of money to make. There's the most amount of money in the world to be made on the market. So wouldn't that attract the smartest people? And some of the dumbest people too. There's a mixture of both. You reckon if Bitcoin is destined to have a strong move downward due to declining momentum on weekly, monthly, we should be expecting a greater edge of Bitcoin doing SR flip to the downside? Yeah, I mean, SR flips when you've got this much momentum are going to be more viable, for sure. In general, an SR flip's always going to work better than an RS flip when it comes to crypto. It's kind of the opposite in common stock, but regardless, I don't really like looking at that too much. If it lines up, then fine. Right, like this lines up technically with an RS flip, so sure. But I'm not gauging this range on Bitcoin based off of this. This is like, if anything, it's a bad thing. If anything, I wish that wasn't there. But it's okay. And it would, it's a good and a bad thing, I guess. There's some, you break certain, certain things by going underneath that. But if it does hold, that's indicative of a really strong hold. And if it does hold here, then we can go for another bigger leg, probably take us a lot higher. Like probably a leg from a percentage gain standpoint bigger than this. So this is like a markup of like 15%, right? If we hold that, we'll probably get like, you know, a nice move up. You got an ad? I don't, that's weird. Did you refresh the stream or something? Are you guys getting ads? You should only get an ad when you first join. There shouldn't be any ads after. That's weird. But yeah, Tom, SR flips are going to be more common to come to fruition in downward momentum, for sure. That's true. And if the bears have that much fluidity, or that much of a stranglehold on the price, then it usually leads to a pretty big leg down. Example of this is just like right here. This was support, right? I mean, you can mark out both of them if you want. That was support, right? Here and here. Price goes below it. Come back up, retest it. Massive leg down. Twitch does it? I thought, well, I have the ads turned off, and I thought Twitch only makes you run ads when somebody joins your stream. I didn't know that they must have changed it to where now you guys are getting ads mid-stream. But they allow you to turn the ads on and off, and I have mine off, so, but even though I have mine off, Twitch still enforces an ad at the beginning. I can't change that. But I guess they got greedy, and now they're just forcing ads regardless. I don't know. But yeah, I mean, if you see like an SR flip, it's usually devastation that follows. SR flip, the acronym is support, resistance, flips. Support turns resistance. Support, resistance, flip. SR flip. I mean, what happened here was pathetic. We should have gotten some sort of rally out of this. I guess the silver lining is that we've left behind short invalidations in the same spot. If that's the only sweep we're going to get here, this is pretty sticky demand. Maybe we don't retest 88, 89. Maybe we just go for it. Reversals are tricky in this spot, Tom, because we went down so quick, you know? You think 10... Oh, you're looking for like the SR flip here? Yeah. I can also tell that you found it tricky because you're looking for SR flips, right? Yeah, I don't know, man. I think if you want to short Bitcoin and you want to hedge Bitcoin, you gotta wait for it to come up a lot more, or you gotta wait for new structure to form. The aggressive short you could do, which I'm not a huge fan of it, but it's not that bad, is the local one. Approximately 91.95, so call it 92 if you want, but this is an aggressive short, but it's really the only short until we go higher, and then shorts look better. Yeah. About it. I mean, there's stuff higher for sure. Like 109 is pretty good for a short. This stuff is mainly done here. There's a little bit of front run. I mean, you could maybe get a really cheeky one at like 104.7, maybe, but it's gonna be fucking cheeky. Like super high risk reward, but low probability of it working out at like 104.7. Because there was, we dipped into liquidity, then we had a front run on it. So you'd expect, the reason why it's even cheekier is because you'd expect to dive into liquidity anyways. So maybe like a double top here. It's kind of wishful thinking. So maybe a little bit higher, like 105.3. But in this pocket right here. Probably zoom in to be more precise, but like in that pocket of like 104.5 to 105.3, maybe there's a short opportunity here. It's not that good, but kind of what I see. The reason why is because this was the area where shorts got squeezed, right? Everybody's short selling after Bitcoin dumps. We squeeze out the short sellers. Instead of going higher, we go lower. We come up for the retest. We kind of dive into it a bit. So you can still get the sort of the exact test of it. But the issue is that you have a front run here. So you have invalidation sitting here. So it's like diving into liquidity plus making equal highs, something like that, maybe. I don't know. I'll know when we get closer to it and what the S&P is doing and all that jazz, but maybe something like that. That's a retest though, and if we're going sub 74k, I think SR is entirely possible. Yeah, that's true. Yeah, that's true. It's just, in my opinion, SRs aren't that good. Particularly when there's so much data in between them. But yeah, I see what, like, you want like 99, right? Maybe. I'm not confident on that one though. Have to see when we get closer to it, I guess. But I'm even more confident on something like this than this. And this one I'm not even confident in. Check Atom high time frame. This is the one that went to 0, right? Like pretty much 0. I don't know. Obviously, going to 0 isn't a good look. Trying to find something here that I could be optimistic about on it, but I don't really see much. No, it's kind of hands off on this thing. Yeah. I mean, maybe something like this. But I don't know, I'm not too confident on that either. This is possible, but this is about it. If it does rally there though, it could have some room to run actually. All the leverage is completely dusted out of it, right? It went to 0. Volume's not that good though. Yeah, equal highs. Yeah, I mean, fuck it. If this happens, really low risk play, because it has a really high risk reward. Volume isn't that bad. I'm kind of being maybe too critical on it. It's not that bad. Yeah, I mean, if you have reason to believe that it's bullish for whatever your reasoning is, I mean, the risk reward's fantastic, right? Getting in at like $2.35 when it's previously traded at $44. I mean, it could be a moonshot here, but I don't know. As it stands right now, it doesn't look great, but I guess it can look a little bit better if that kind of stuff happens. Technology is kind of decent. Yeah, maybe then. You want to flush these guys out. Then the leverage is completely gone, right? Because they got rid of all the leverage here, and then there's going to be more people to add on to longs. I mean, this is where they get the final blow to long devastation. And then if it recovers from that, then you got a lot of runway. But obviously the chart doesn't look very good. You can stake for 17 to 20% API. You got to be careful with those kind of APY numbers. 20% APY is feasible. Like you can get, think about APY like this, right? The safest APY you can get right now is like 4%. Around 4%. That's like hard safe because it's, you know, treasury bonds, the United States. And then you can get into like a little bit less safe stuff like corporate bonds or junk bonds. Yeah, upper threshold of that, you can get to like 8 to 10% maybe. But that comes with more risk. And then once you get above, like, if the interest rates are where they are right now, right? If the interest rates were way higher, I'd have a different opinion on this. But because they're where they are right now, getting up to like 20% APY starts to get a little bit it's a little bit scary because there's usually a lot of underlying risk that comes along with that. If you could have an asset that pays you 20% APY plus it increases in value at an absurd rate, that's like a dream, right? Imagine you buy this thing, right? The thing we're looking at, and you're getting paid 20% to stake it, and the price goes up by like 5x. Like, where the fuck are you gonna find something like that? I mean, it's possible, it does happen, but it's risky, right? I mean, any crypto's risky. Any financial instrument's risky. It just depends on your appetite, I guess. I mean, if we're being 100% honest, even treasury notes are risky because you're betting on the future of the United States. So it all comes down to some amount of risk. Most people don't think that the United States is going anywhere anytime soon, and I'd agree with that, so that's why it's considered pretty much no risk. But, I mean, with inflation the way it's moving right now, I don't think it's absurd to go for higher yield. I think going for a higher yield on with the way that inflation is not too crazy. Because even if you go to treasury notes, you're barely beating inflation, and some would argue you're actually not beating inflation. Like the true inflation, not the numbers they put out. Yeah, Tom, I agree with that. The silver lining, though, Tom, is like, well, you know there's no fucking long leverage left. I mean, what did this thing go to exactly? There can't be any long leverage left in this thing if it wicked down to... It's not even letting me magnet this thing. Hold on. 0.001. A tenth of a penny. It went down to a tenth of a penny after trading at $44 a share for a coin. So I guess that's some silver lining. I'm curious, what's the funding rate look like on this thing? Is CoinGlass you guys? Nice, it's working. Okay. Let's see. Here we go. Oh yeah, negative funding. There you go. I bet you the funding will be even more negative. It's at sorry, I'm zooming in so you guys can see it. It's at 0.02 negative, but it's pretty much negative across the board except for KuCoin and BingX. I imagine if you flush this low out though, the funding will be even more negative. Like if you're getting like negative 1% funding, there's just no longs left. It's only shorts. The bottom is 0. Like pretty much literally in this case, the bottom was 0. But this also happened when Binance went down. So like if somebody is providing liquidity or market making this Cosmos, this probably destroyed a lot of small time, medium time market makers. This one financial instrument probably did the most damage because I don't think any alts in the big boy club went down this badly. It's funny how we just like Binance going down, like nobody talks about it anymore, but you got to understand, like market making guys with 8 figures, 9 figures got completely fucking dusted, dude. Like in one day, arbitrage market making through perpetuals and spot, like you had 7-figure guys, 8-figure guys, even 9-figure guys just completely fucking dusted, dude, because Binance went down. Now you can argue that it was stupid on their part because they shouldn't have been used, in my opinion. I don't know how their models work, but you gotta take advantage of the fact that there's isolated leverage. Like if you're crossing leverage, use cross leverage. I don't know exactly how they built their systems in particular, but you're exposing yourself too much when you don't need to. Well, you can say what you want about Arthur Hayes, because adding 100x leverage when the volatility was what it was back in the day is pretty fucking ruthless. Volatility on Bitcoin was much, much higher years ago. 100x leverage, you know, was it, like basically Bitcoin back in the day moved how Ethereum moves nowadays, you know, with big volatility, probably even more so. So yes, it was introducing 100x leverage on an asset that moves 10% every day is fucking nuts. But one of the good things that he did was isolated leverage. The introduction of isolated leverage was a huge, it's a huge benefit for retail market participants. Huge benefit. You have to use it to your advantage. Because isolated, you only lose the margin on the position. Cross, you lose the whole fucking account. Put the risk back on the exchange if they're allowing you to do it. Why not? If you're providing liquidity or market making, you expect that to always be able to reduce positions, right? You should always have the option to reduce positions. Well, we found out in October that maybe that's not always the case. Maybe you can't even reduce positions. So this thing wicks down to one tenth of a penny, and there goes, you know, 8-figure account in a matter of 15 minutes. Just wiped out. Do you think buy spot orders worked when? It depends. It's mainly, if it's on Binance, it's mainly arbitrage because of the limitations of how low you can set your limit orders. Unless these limit orders existed before those rules were put into place. Which they might, some of them might have been. Which XRP scam wick? If you're talking about the one on the top side or the bottom side? The top side, I actually grabbed that one back in the day. Bottom side, no. But yeah, I mean, dude, when perpetual contracts first came around, this was like it was like 2017 when it hit mainstream, right? It really hit mainstream in 2018. But this was sort of like the origin of perpetual contracts. It was a fucking bloodbath, man. Like there were the market participant sophistication level was nowhere near it is today. The average trader back then didn't even know what a market maker was. It was carnage. And one of the evidence that it was carnage was actually you had Ethereum going down like 5-10% a day, but the funding on it was positive. The thing's dropping consistently 5 to 10% every day, but the funding is positive. It's fucking nuts, dude. To put that in simple terms, what it means is Ethereum was going down 5 to 10% every day, right? But people were still longing it every time it went down. Every time they got fucked on their long, they're like, all right, I'm gonna load up more Bitcoin, I'm gonna long it again. They got fucked, I'm gonna load up more Bitcoin, I'm gonna long it again. And it just kept happening. So if you were shorting it, you were getting paid on the, you know, the percentage movements, like it going down, and you were also getting paid on funding. I mean, it was a fucking carnage, dude. It still is nowadays. Like the liquidation numbers are even bigger than they were before, but at least there's a lot more, you know, there's a lot more content on the internet that at least tries to help people use risk management. In my opinion, there's not enough. People don't talk about risk management nearly enough because it's not fun. It's not going to get you more viewers or more clicks, but it's super fucking important. "2018 was paying for the bulls." Oh yeah, man. If you saw the troll box back in that time, people are saying some heinous things in that troll box. You don't get your daily dopamine shot from risk management? Yeah, I guess that's true. Yeah, I mean, people are always going to want to size up. That's why you have to separate it. You have to try your best to separate the stimulus of trading from the just the logic. Like you want to be as rigid as you can. You're not opening a trade so that you can get the feeling of it going up and down. Fuck that, dude. It's about making money, right? Don't lose sight of that. Especially if you find yourself in like a dark place, you're just going to open up trades because you want to see it go up and down, whether you want to admit that or not. So once you have it set, right? Once you have the stop loss, entry, and target, Stop looking at the fucking unrealized P&L. You don't even need to look at the candles anymore. It's in the hands of the trade. You have your plan, right? You're in the trade. Stop looking at it. I'm in a very dark place right now. Forgot to pay for electricity. But no, seriously, like once you have target, stop loss, there's no reason to look at it. Because you know you're going to make mistakes if you look at it, and you're reinforcing this dopamine thing. This stimulus dopamine thing of like, well, I'm going to stare at my unrealized P&L and the 1 minute candles and watch the 1 minute candles go up and down and my unrealized P&L go up and down. Fuck that, dude. Stop doing that. If you get stopped out, you get stopped out. Why do I know this? Because I was guilty of it too, man. Everybody is. Everybody in this chat